Hello everybody. In continuation, this is Manisha. In continuation to my previous PPT, let us read this one. We were on reverse charge. Like if there is a UK company and there is a UAE company. We are taking legal services from the UK company. The UAE company is asking for legal services for which it is ready to pay 4,000 dirhams. So as there is no VAT in between these two countries, but it will be treated as if it is being purchased locally. The services are rendered locally. It will be treated as such. So 200 dirhams, which is the input tax and output tax, will be paid by the UAE company to the tax authority. This is called the reverse charge. Now let's move ahead. Mechanics of VAT. Categories of supplies. What all is exempted in VAT? Residential property under lease, residential property second sale onwards, and public transport. Zero rated. Investment, gold, silver, platinum, first sale of residential property, exports, medicines and medical equipments, international transport of passengers and goods, healthcare and education. Standard rated. All supplies of goods and services other than exempted and standard rated. These will be all other goods and services will be at 5%, except these exempted and zero rated ones. All others will be at 5%. Now, categories of supplies. Value of supply, value of consideration, monetary and non-monetary value of transaction, actually paid or payable, or according to the fair market value. It will include all the expenses, fees and taxes charged by the seller except the VAT, while it will exclude price reductions and discounts, subsidies, any government subsidies, and amount paid by the supplier on the behalf of the customer without deduction of the tax paid on such amounts. Incidence of tax, timing or supply. What is the time when it will be treated as supply? Tax becomes due on the date of the supply of the goods or services, the date on which the supply is being done, the date of issuance of the tax invoice, when the tax invoice is done, or upon partial or full receipt of the consideration, whichever comes first, and to the extent of the amount received. Any of these three conditions, whichever comes first, the date of the supply, date of issuance of tax invoice, and upon partial or full receipt of the consideration, whichever comes first and to the extent of the amount received. For perpetual supply contract, tax becomes due on the date mentioned in the invoice, date of the actual payment, or once in every period of consecutive 12 months. Place of supply of goods and services. There are some special rules, like in case of lease transportation, at the disposal of customer. In case of lease transportation, when the customer wants it, it will be in case of goods and passenger transport services, where transport begins. In case of real estate related services, where real estate is located, where the property is located, there it will be treated as supply. In case of telecommunication services and services supplied electronically, the place of actual use. In case of restaurants, hotels and catering services, where sales services are actually performed. In case of cultural arts, sports, education and entertainment services, where such activities services are actually performed, whether these actual services are actually. In case of B2C services related to movable goods, where such services are actually performed. Again the same thing. Now, time of supply. The time of supply determines the tax point. The time determines when it will be taxable. This fixes the time at which the VAT registered business are required to account for the VAT on the supplies they make. The tax point should be treated on the VAT invoice. There can be more than one tax point for a supply. Continuous supply of services payment or invoice issued, like basic tax point and advanced tax point. Payment invoice यहाँ पे generate होगा. Advanced tax point, the payment invoice will be generated. Supply. Goods are made available to customers, services are performed. Doesn't matter, the time is at the when the invoice is being generated is at the advanced tax point. Now let us go back and see go through everything. This is an overview to give you as what has happened. Tax group, each member state may treat the tax group as a single taxable person in accordance with the rules and conditions. Tax group means two or more corporate persons who are residents of the same member states. Transfer of goods between the group will not attract tax. It will be treated as one full person. Reverse accounting charge a mechanism by which the taxable customer is obligated to pay the tax due on behalf of the supplier and is liable for all the obligation provided for in the agreement. If the taxable person is in a member state receiving taxable goods or services from a person who is a resident in another member state. If a taxable person residing in a member state receives services from a person who is not a resident in the GCC territory. So it all, as we saw in that example, we will have to pay reverse charge on that. Tax invoice. The taxable person must issue a tax invoice or similar document in the following cases. Supply of goods or services, including a deemed supply as provided for in Article 8 of the agreement, full or partial receipt of consideration prior to the supply date. Contents of the tax invoice. So what will be the tax invoice containing? As nothing has come up, but still it's an idea of it is for giving you an idea what all will be considered, what all will be contained in the tax invoice. The invoice date and invoice number, the type of supply, the quantity and the description of the goods supply, so that we are ready with what all documents we will be requiring and what all things will be required. Company's name and address, the name and address of the customer, company's VAT registration number, the date of supply, the tax point, the rate of VAT for each supply, the VAT exclusive amount for each supply, the total VAT exclusive amount, the amount of VAT paid. These all things will be, it's an overview as to these all things will be considered in the tax invoice. Readiness for VATs. What all we need to prepare before that? Books of accounts, purchase day books, sales day book, invoices issued, invoices received, credit notes, debit notes, VAT ledger, zero tax purchases, exempted purchases, zero tax sales, exempted sales, purchases with non-registered vendors, and additional information necessary to verify entries. Readiness for VAT preparations for implementation. Financial reporting and management. Maintain proper. These all things we need to do before implementation of VATs, or else we would not be able to cope up with it. We will come out with measures as slowly and steadily. Maintain proper books of accounts and records and accurately calculate VAT due to the government on a timely basis. Whatever VAT is due to the government, we have to do it on a timely basis. Make a project plan and budget for the cost of implementing VAT. A budget and project plan has to be made ready. Invoices and other documents need to be redesigned, showing VAT as distinct component in sale price invoice to show the VAT registration number, etc. Cash flow needs to be managed efficiently, as the net VAT collected might have to be deposited with the treasury at specific dates, say monthly or quarterly. Failure to do so may result in penalties. Composite supplies of goods or services where one is taxable and other is exempt. Analyze and understand transitional issues of supplies of goods and services that span that VAT implementation period. Evaluate the impact on pricing for any suppliers that span the VAT implementation period. Anything which is coming under that will have to be considered. Inventory management system would have to take into account the impact of VAT on VAT inventory. System. How our systems need to be updated. VAT system will be introduced by the government, will be heavily dependent on technology. For example, VAT may be paid through online portal. So our system has to be updated with it. Business units should assess capability of existing IT and accounting system. Necessary modifications in IT capabilities and accounting software will be required. The accounting system should be separately able to calculate and record the value of items subject to VAT and exempt from VAT. This is important for business such as supermarket, pharmacies. Staff needs to be educated and trained. Now this is the major important thing, that training of staff and education of the staff thoroughly on procedures for implementation of various systems and managing the portal. It is very important to do that. VAT impacts. Long-term contracts. Tax points after implementation dates, a requirement to charge VAT unless grandfathering. Is there a contractual right? These are the questions which need to come up. Like in long term contracts, is there a contractual right to charge VAT? Prices presumed to be VAT inclusive unless a VAT clause is included. If no ability to charge VAT in addition, the VAT becomes a cost to the supplier. Pricing. Will business increase prices by 5% provided the contract allows it? It will, most probably, because it will be an additional cost to the company. So it has to. Market sustainable pricing. Will business absorb some of the cost? It might, because of the competition. Competitive environment in the lead up to the introduction of VAT. Cash flow. Even if VAT is recoverable, businesses will need to consider the cost of pre-financing VAT on purchases prior to recovering on the next VAT return. VAT implementation. Now, this is an overview as to how and what has to be done in VAT implementation. VAT system requirement, like for information systems review and changes for VAT compliance. Suppliers, end of current business tariffs and charges, preference for VAT vendors to maximize ITCs, use of self-billing, other billing best practices to maximize credits. Pricing, modeling, structure of offers, financing. This is just an overview, and this is a accumulation of every kind of a department, what all has to be done. This needs to be discussed in detail, and we will do it in detail in my next presentation. VAT implementation. How can we help you in it? Phase 1 is impact assessment. Phase 2 response, strategy and roadmap. Phase 3 to be planning and preparation. Phase 4 implementation and test. Phase 5 post implementation review. We can train staff, account structuring for compliance with VAT, designing VAT reports, selecting appropriate software implementation and installation of same, compliance support, registration, preparation of monthly output tax liability, VAT returns, representing before the tax authorities. These all works can come up with us. You can contact us for this. Thank you so much.